Welcome back to the channel. Today, we're diving into the most obvious bullish setup any liquid market has had in years. And no, that's not an exaggeration. I have the data to show you how the stars are aligning for the biggest crypto bull run ever. Seriously guys, there are so many bullish factors converging right now, it's almost impossible to ignore. This is the kind of opportunity that could genuinely change your life. But you need to understand what's going on to take advantage of it. So buckle up because we're about to break down the 10 reasons why this bull run could be the biggest one yet. You know me, I try to stay away from politics on this channel, but it's impossible to ignore the impact of politics on the markets. And with Trump's recent victory, things just got extremely interesting for Bitcoin. Look, whether you love him or hate him, you can't deny that Trump is a polarizing figure. He's also someone who understands the power of disruption, and that's exactly what Bitcoin represents. Remember, this is a guy who built a multi-billion-dollar empire. He's not afraid to take risks, and he's not afraid to challenge the status quo. And that makes him a natural ally to the crypto space. We saw this during his previous term when Bitcoin went absolutely parabolic. Now, with him back in the White House, there's a renewed sense of optimism that he can create an environment where crypto thrives. This wasn't just a random event, guys, this was the final puzzle piece falling into place. The stars are aligning, and this could be the catalyst for the biggest Bitcoin bull run we've ever seen. Alright, so Trump being back in office is huge for crypto. But here's the thing, it gets even better. We didn't just see Trump win, we saw a red wave sweep across the US. And for crypto, that's like pouring gasoline on an already raging fire. Why? Because it means that Trump now has the political capital to actually push through his agenda. A Republican-controlled Congress means fewer roadblocks, less resistance, and a much easier path to enacting crypto-friendly policies. This isn't just about stopping bad regulation, this is about creating an environment where crypto can truly flourish. We're talking about clear, concise, and pro-innovation regulation. The kind of regulation that attracts investment, fosters growth, and turns the US into a global crypto superpower. The stage is set, my friends. The pieces are in place. The red wave has washed over Washington, and the future of crypto is looking brighter than ever. Let's talk about something that's been getting a lot of attention lately. Bitcoin as a strategic reserve asset. Now I know what you might be thinking. Graham, isn't that a little far-fetched? Here's the thing. It's not as crazy as it sounds. Think about it. The world is facing some serious economic challenges right now. We have inflation through the roof, geopolitical uncertainty like never before, and traditional markets looking shakier by the day. In times like these, people, especially governments and institutions, start looking for safe haven assets. They want something that's scarce, decentralized, and resistant to government control. And you know what fits that description perfectly? You guessed it, Bitcoin. Now I'm not saying that it's going to happen overnight, but the mere fact that it's being seriously considered is a massive vote of confidence for Bitcoin. It shows that the world is waking up to its potential, and that's only going to drive the price higher in the long run. Chapter 4, Fed rate cuts, fueling the crypto rocket. Let's be real, the Fed has been on a rate hiking spree for a while now. But here's the kicker, the end is in sight. Experts are predicting rate cuts to start rolling in soon, and continue all the way through the first half of 2025. This is massive news for crypto, and here's why. When interest rates are low, borrowing money becomes cheaper. That means businesses have more money to invest, consumers have more money to spend. And guess what? Some of that money is going to flow straight into risk-on assets like crypto. It's simple economics, folks. When the cost of borrowing goes down, the appetite for risk goes up. And in the world of investing, there are few assets as inherently risky and potentially rewarding as cryptocurrencies. So, buckle up, because the Fed is about to unleash a tidal wave of liquidity into the market. And when that happens, you better believe crypto is going to be one of the biggest beneficiaries. Chapter 5. It's not just the US global rate cuts are coming. Okay, we've talked about the Fed cutting rates, but here's the thing, it's not just the US. This is a global phenomenon. All around the world, central banks are starting to ease up on monetary policy. They're cutting rates, they're injecting liquidity, and they're basically doing everything they can to stimulate their economies. And you know what that means for crypto? It's like throwing a match on a bonfire. See, when you have coordinated monetary easing on a global scale, it creates a rising tide that lifts all boats. But here's the thing, some boats are going to rise a lot faster than others. And I'm willing to bet that crypto, with its decentralized nature and potential for explosive growth, is going to be one of those boats. This isn't just a US bull run, guys. This is a global crypto revolution, and we're just getting started. Chapter 6, Global Liquidity Tsunami, Bitcoin's about to get soaked. Let's talk about something called global liquidity. In simple terms, it refers to the amount of money that's sloshing around in the global financial system. And guess what? Right now, global liquidity is surging. We're talking about trillions of dollars being pumped into the economy, thanks to those rate cuts and stimulus measures we talked about earlier. Now, here's where it gets really interesting for crypto. Bitcoin, by its very nature, is a liquidity sponge. It's scarce, it's divisible, and it's becoming increasingly easy to buy and sell. So, what happens when you have a tsunami of liquidity hitting the market, and Bitcoin is sitting there, ready to absorb it all? You guessed it, the price of Bitcoin goes parabolic. It's like pouring gasoline on a fire, guys. The more liquidity that enters the market, the higher Bitcoin is likely to climb. And with global liquidity at record highs, the stage is set for an epic bull run. Alright, let's talk about something that's got the entire crypto world buzzing, the spot Bitcoin ETF. For years, institutional investors have been clamoring for a way to get exposure to Bitcoin without actually having to deal with the hassle of buying and storing it themselves. Well, guess what? The wait is almost over. The SEC is finally starting to crack open the door to a spot Bitcoin ETF. And let me tell you, Wall Street is chomping at the bit to get in on the action. We're talking about trillions of dollars in potential investment flooding into the crypto market. And when that happens, it's not just Bitcoin that's going to benefit. The entire crypto ecosystem is going to experience a massive surge in demand. This is huge, folks. This is the kind of catalyst that could send Bitcoin to prices we've never even dreamed of. Remember when crypto was this niche thing that only tech geeks and libertarians talked about? Yeah, those days are long gone. Now everyone's talking about crypto. Even your grandma's probably asking you about Bitcoin at this point. But here's the thing that's really got my attention. Even wealth managers, those traditionally conservative stewards of wealth, are starting to pitch crypto to their clients. Think about that for a second. These are the guys who have built their careers on managing risk and protecting capital, and they're telling their clients to buy crypto. Why? Because they know that the world is changing and they don't want to be left behind. They see the writing on the wall. Crypto is here to stay, and it's only a matter of time before it becomes a mainstream asset class. And when that happens, you better believe they want to be able to say they saw it coming. Let's talk about supply and demand for a second. It's one of the most basic principles of economics, and it applies perfectly to the world of crypto. On the demand side, we've got all those bullish factors we've already discussed. Institutional adoption, global liquidity, easing monetary policy, you name it. Demand for Bitcoin is absolutely exploding. But here's the thing, on the supply side, things are getting even more interesting. You see, Bitcoin has a fixed supply. There will only ever be 21 million Bitcoin in existence, and not only that, but the rate at which new Bitcoin are created is decreasing over time, thanks to something called the halving. So you've got this situation where demand is skyrocketing but supply is shrinking. What happens when you have more demand than supply? The price goes up. It's basic economics, guys. And in the case of Bitcoin, it could lead to a supply shock that sends the price to absolutely astronomical levels. We've talked about a lot of bullish factors today, but here's the thing that really blows my mind. It's not just that all of these factors are happening, it's that they're all happening at the same time. Think about it. We've got Trump back in office, a Republican-controlled Congress, the Fed cutting rates, global liquidity surging, institutional investors piling into Bitcoin, and a supply shock on the horizon. It's like all of the stars have aligned to create the perfect storm for a crypto bull run, and the best part? We're still early. We're not even in the mania phase yet. This is your chance to get in before the masses, before the FOMO kicks in, and before the price of Bitcoin goes absolutely parabolic. Don't let this opportunity pass you by. As you can see, we have a unique set of factors all combining at once, and all of them point towards explosive upside. It's probably going to be a crazy next 6 months in crypto. I've never been more bullish on the future of this asset class, and I truly believe that we're on the cusp of something truly extraordinary. But remember, this is just my opinion. Do your own research, make your own decisions, and never invest more than you can afford to lose. This is a volatile market, and there are always risks involved. But for those who are willing to do their homework and ride out the volatility, the potential rewards are unlike anything else out there. Follow for more updates.